Jeremy, how are you?
I am doing good. That was a really cool video.
I know, it's kind of building. It's like a Scorsese build. That was great.
Yeah, I feel like I'm about to walk out in a basketball arena and just take off the tearaways, start shooting around.
Yeah, let's go. That's awesome. This is a live event, so we're going to give a couple seconds for people to join. But a little bit of housekeeping off the top. If you do have any questions for Jeremy or I throughout this session, we'll try and answer as many as we can. We do only have 30 minutes today, but please do submit your questions. Our social teams are monitoring all our social channels as well, so we'll definitely get to those. If we don't get to them during the session, we'll definitely follow up after as well. So let's dive in. I think we have enough attendees today. So hello and welcome. My name is Chris Pinkerton. I run global channel partnerships at Clearco. Clearco is an organization that funds fast-growing e-commerce and SaaS brands. We funded over 6,000 businesses across North America and into Europe. And a lot of times founders come to us and they ask us how to deploy capital in an efficient way that's going to create kind of sustained growth for their business. And a lot of times that the answer to that boils back down to how much they know about their own business and the data that they have that can really infer what they know works and what they know that doesn't work. And so we're thrilled today to have Jeremy Horowitz from Daasity with us today. Jeremy's the director of marketing at Daasity, and Daasity is an organization that allows direct-to-consumer brands access to data that can make them a better organization and know what's working and what's not working. So Jeremy, please introduce yourself. Glad to have you here.
Really appreciate it, Chris. So for everyone, I'm Jeremy. I'm the director of marketing at Daasity. We are the leading analytics provider for growing e-commerce brands. So the really high level, what we do is we sit on all the different tools that you use across your tech stack, all the way from top of funnel marketing through logistics, returns, customer support, operations, and everything in between. And we essentially just consolidate all of your data in one place. So it's really easy for you to manage all the different pieces. And we're going to talk a lot about marketing today. We can also talk about inventory. We also track a lot of different pieces around once you get all that money in, how to properly deploy it and how to make everything more efficient so that you can grow faster. And one quick stat, I know data isn't that sexy, but just one really important stat that I always like to lead with is the companies that leverage their data are 23 times more likely to acquire a customer than their competitor. And they're most of the time, they're going to be 10% more profitable. So not only are you going to grow faster, but you're also going to be more profitable, which especially in e-com and retail is so essential to just keep continuing to grow and keep adding to that bottom line as well.
Yeah, those are some wicked stats, Jeremy. And I think you are making data sexy again with some of those. So I'll hold you to that. But since we only have a little bit of time to kind of share and unpack data as a whole, I thought we would kind of start with kind of what the theme of today was, which is what kind of core metrics can you track in your business that's going to allow you to improve your growth. So maybe as kind of a beachhead into this topic, I'll start with maybe asking you, what are 3 or 4 metrics that you believe a D2C brand should track, or at least know, to help their business kind of improve and grow outside of kind of just top line revenue and return on ad spend?
Yeah, so out of those core metrics, and I would put AOV and conversion rate as that core that everybody should really monitor. There's 3 that I'm going to cover today, especially as you think about marketing and growth for your business, that we've seen that the brands that have really started with us in that younger stage and then really grown to 8, 9 figures, 10 figures in revenue, and a lot of big exits as well as fundraising have really owned and leveraged is understanding the difference between CPA and CPO, which is your cost per acquiring a new customer versus your cost per driving any order from your store. And I'll dive into kind of the nuances of what that really means. And then also understanding your LTV. And there's a couple ways to look at LTV, but at a high level, it's your gross margin. So how much revenue minus the associated product costs does a customer bring into your business over time? And then looking at that in a couple of different views. So for your customer base, and then by each marketing channel and by the first product that a customer purchases. And I have some really cool examples of how some brands really took that data and then completely changed their entire business. And that's what catapulted them to massive growth and being able to fundraise and really see those large exits. And then the third one, I think this is probably not very well known, but it's really cool with the people who do, because it's a little bit of an insider metric that's also very popular from retail, that once you understand how it works, you can really accelerate your business in a lot of different areas, which is a unit per transaction. So basically what that just means is how many units or how many products are you selling in every order that is placed on your store. And the reason why is, right, classic game of sales, the more stuff you can sell at once, the more money you can make, the more money you can make, the more money you can invest back in the business and really take off. And we find that the businesses that track all of their core metrics and then really understand how kind of the unit economics of their business and how the mechanics of those three really work well are able to really put the foot on the gas and make those right investments when the time is right.
Oh, that's fantastic, Jeremy. So maybe just to unpack these, there's probably a lot of first-time founders that are listening to us today. And I know when you're starting to talk about data, there's a lot of acronyms that come flying at you and you're trying to kind of put them all in the right place. So maybe can we talk about CPA and CPO and the difference between the two and kind of just maybe break those down in simple terms?
Yeah, sure. So what you see on Facebook every day, they're going to call is your cost per acquisition. It's not. I'm just going to start with a hot take. It's actually your cost per order, and I'll break down the nuances and the differences and why it's really important to understand those. So your cost per acquisition is essentially how much money did we spend in marketing divided by how many customers did we bring in, and then it has to be net new customers. They've never purchased from our brand before. And so what's really important is how many dollars do we need to spend in marketing to go and bring new customers into the brand and to continue to grow from an audience perspective. What a cost per order is just your total marketing expense divided by all of the orders placed from your store, regardless of whether they're a new customer or not. And so why we always really want to focus on this and why I'm probably going to beat a little bit of a dead horse here is Facebook doesn't really know all of your entire customer base and whether someone has purchased from you or not before. And so what they're really showing you is that CPO number every time that you look in the platform. And I know I'm picking on Facebook here. All of the advertising platforms do this, but it's really important to understand because what a lot of founders do, and especially when they're in the raising money phase, is they're really being judged based on that cost per acquisition number, but what they're really reporting is their cost per order number. And so the important distinction here is that your cost per order number should be significantly lower than your cost per acquisition number, because you're also bundling in all of your repeat purchases and your retention side of your business. And so what the second really big important piece of why you want to break this out is you need to have a really good understanding of what your acquisition costs are versus your retention marketing costs. And if you assume that all of your marketing is going into your acquisition costs, then you're actually eating a ton of money on your retention costs that you're not aware of, because it still costs some amount of money, even if you have a super optimized program and you have a great loyalty program and you have a really strong email program. There's gonna be some expense on one side and the other. And so really breaking that out, really understanding, okay, it costs us X dollars to bring in every new customer, it costs us X dollars to bring in every return customer, and how can we really leverage that? Because at the end of the day, your acquisition costs for almost every business that I know go up over time. And so what you want to do is you want to have really effective retention marketing costs to keep that really low, so it's way more profitable on the back end of your business. And then what you'll see is this flywheel of you can afford to spend more money to retain more customers. The longer you retain those customers, the more money you have to then cycle back in to acquire more customers.
Yes, that's such an important point, and retention is so critical to sustainability, I think, in growing a business. And can you give it some examples of, once you've identified those metrics, like how often do you look at them? Are you constantly kind of pivoting the business based on real-time data, or how do you actually interpret that in real time?
Yeah, so the faster you come to an insight and the faster you can action it, the better. We have brands that are looking at their CPAs daily or multiple times a day, and then making adjustments to their Facebook. So one cool example that I love is Drink Monday. They're a non-alcoholic spirits company. So all of the flavors of alcohol, but none of the terrible side effects. And their founders, they launched earlier this year. They're really taking off. Their founders look at their Facebook CPAs once, maybe 2 to 3 times a day, and will adjust budgets and will adjust creative and will adjust where they're focusing, because they're really trying to leverage to get those incremental improvements, because then if they can drop their CPAs, they can afford to acquire more customers, and the customers that they acquire are more profitable.
Yeah, that's so great. And do they get to the point where they also back that out per channel as well, because certain channels are probably going to drive a different CPO, I'm assuming.
Yeah, and so that's why it's critical that you have it as a summary number, and then you can break it down by all of your marketing channels. And so there's another dashboard that we also have in our platform that shows the new versus returning customers from each channel. And it gets really cool. You can kind of move things around like dials and levers of, okay, here's what our CPAs are for these channels. These are the new versus returning balance that we're seeing. Where do we want to put our foot on the gas? Where do we want to pull back? Where do we want to adjust budgets so that we can be as efficient as possible?
Yeah, that's so great, because in our business, we're providing capital, and a lot of times marketing capital or inventory capital to brands. And how they deploy that as they're getting bigger and bigger, it becomes harder because the wins aren't as quick and easy and obvious, right? You kind of need to understand at a channel by channel level where to create that investment to grow. And then I guess that brings us to lifetime value, which is probably one of my favorite metrics to look at. And I know some of the founders that we talk to, they're very early kind of in the growth of their business, and it's harder to calculate lifetime value, and they don't know whether they should be locking into an actual understanding of lifetime value early. Can you maybe walk us through just lifetime value and why you need to kind of understand that and how it drives your business?
Yeah, sure. I mean, lifetime value is the one metric that defines how valuable your business is. Like, I'm just gonna like throw that out there pretty early, is that basically what you're looking at is, for all of that investment that we just talked about on the marketing side, how much money can you really make from that customer base over time, right? Because for the brands that, and I'm sure you've seen a lot of this, especially within the investor community, right? Like if a company can spend a couple $100s to get customers that will spend thousands of dollars over time, we're going to take that every day, all day. And how can we just accelerate the acquisition there? And so what's really important is to just really have that metric dialed in. And so what we look at is we want to take out product costs so we can really understand from a profitability perspective, how effective is that value over time. And so we can do this at an entire customer base level. So what's really cool about Daasity is that we're not just pulling in from your direct to consumer business, we're pulling in from marketplaces like Amazon, your retail business, and we can take a holistic view of your customer across all of those channels. And so what can be really cool is maybe you acquired a customer through Amazon and they came back to buy through Shopify, and then they came back to buy through Amazon again or Shopify again. And what can be really cool is you can start to engineer your acquisition strategy around what is that path that customers will come and stay around for the longest time. And so really understanding over time, right? Because that's also the other difficult thing is it isn't a SaaS business. It isn't like a repeat every like monthly recurring revenue. And so what you really have to do is you really have to understand over time when you acquire those customers, how valuable are they going to be? Because then there's a lot of different access to capital and other strategies that you can really pivot the business around, that you definitely need some data. Like, you can't calculate LTV at day zero, but as soon as you feel comfortable and as soon as you can look at those metrics, it's going to be really impactful, because then once you have the baseline, you can start to look at what is the LTV by specific marketing channels. So right now, not just what's the top line revenue that someone's bringing in, but are these customers going to actually stay with the brand and be profitable over time? From a product perspective. So we had a really cool brand called, I actually have a couple. To me, this is the one piece of the business where once a company figures it out, this is where they just like hit that inflection point where they really, or escape velocity is another popular term. And so a couple of examples of that is Who Gives a Crap, which is one of my favorite brands. They sell recyclable toilet paper, just paper goods in general. So toilet paper, paper towels, tissues. And then they also donate part of their profits to charity to build toilets in underserved communities. And they really put all these pieces together where they're tracking the lifetime value by marketing channel. They also drop limited edition toilet paper, which I think is really funny. Like, it's toilet paper is probably like one of the most commoditized products in the world, but they do these really creative drops around like specific designs and packaging. And so they've really dialed in what marketing channels are requiring what customers, what are those customers buying in their first couple of orders that then indicate whether they're going to come back and repurchase a lot or subscribe to their Subscribe and Save program. And once they figured that out, I mean, don't get me wrong, COVID was the shortages were very good for their business, but they really figured out how to optimize all of those pieces. And they were that's also what gave them the confidence to place those huge bets into inventory and those huge bets into those marketing channels that allowed them to actually go through that growth curve.
Yeah, no, that's great. And obviously, lifetime value is a direct proxy for your retention success in a business. Do you find that, or I guess, what's the cadence or the sequence of reevaluating your lifetime value? Is it a constantly moving target, or is a really stable business one that kind of stays in a certain range or pocket of plus or minus 10%? How should a founder kind of think about lifetime value and when to keep analyzing it and looking at it?
Yeah, that's a great question. So I would say it's something you always want to keep your eye on, but to be honest, it's not really going to be all that valuable to analyze on a weekly or a monthly basis. It's probably something that you want to look at, it at least once a month, and you want to actually analyze it about every 3 months. The other important thing we're very, I would say, very highbrow about how we calculate LTV. And my founder had spent 25 years previously doing analytics for D2C brands, and so what we do also with our LTV calculation is it's cohort based. And so really simply what I mean by that is we're only comparing the customer lifetime value of each customer that's acquired at the same time. And then we calculate it out based on how long they've been a customer. So simply what I mean by that is somebody who was acquired a month ago, their lifetime value is only being calculated and compared to everybody who had 1 month of being a customer of your business. Versus the customers that you acquired 3 years ago, we're going to compare that to everybody who was acquired 3 years ago. And so what that allows you to do is allows you to show trends over time, so that as your business matures and develops, and as you really start to see those cycles, you can see, it's cool because you can go back to like, oh, that marketing campaign was super successful because everybody that we acquired in Q3 of 2020 really just stayed with the business. And so it's really important to have somebody look at it probably quarterly and be like, okay, we launched all these new products, we launched all these new marketing and promotional initiatives. What really moved the needle? What maybe didn't? And then cycle that into the next quarter and the next maybe year's plan. But it's not something that you should expect to see changing day to day or even week to week.
Yeah, that's such a good mindset to have. Thanks for sharing that one. But we have lots of questions coming in for you, but before I get to those, can we dig into units per order first and just give your kind of perspective on that and how maybe some of your customers think about that metric and how they utilize it in their business? And I'll get to some questions that have come in.
Yeah, definitely. So I think we went, like, just seeing the grand shifts in e-com, we went from massive marketplaces trying to sell as many things as possible in one order to these D2C brands that really try to verticalize, get really optimized funnels and push people through to maybe buy 1 or 2 products as quickly as possible, because that was really what juiced the Facebook algorithm, for lack of a better term. I think we're going to start to see a shift back in the brands that I've seen that really, I think it's that inflection point of, I think you can scale, if you're really good at advertising and marketer and you have a killer product, to high 7 figures if you really have everything buttoned in. But the companies that I see that really make it to that 8-9 figure in a sustainable fashion, where it's not like they just rocket up to there and then you kind of never hear from them again, have really figured out how to move more units with every customer that comes through their business. And so, right, I run a black t-shirt shop. I have a really cool black tee. It was endorsed by a celebrity. Everybody's coming to buy my black tee. What the brands that have really figured out, and that units per transaction or units per order metric, they've really figured out is, okay, they're coming for this, but let's try to sell them sweatpants. And right, it's that classic, like, do you want fries with this? It's that upsell, cross-sell. And what they've done is they've been able to either bundle up or upsell and cross-sell really efficiently. And what that does, especially thinking about all the previous metrics we just mentioned, going back to your CPA, assuming that your marketing cost is the same, if I spend $50 at your store or I spend $100 at your store, your same marketing costs got way more profitable because I just spent twice as much money. And then going to your LTV is now way higher, because in that same order, instead of me spending $50 at, let's say, a $50 margin, so my LTV would have been $25, my $100 order at the same margins is now a $50 LTV. So I'm also twice as more valuable to your business. And so once you can really creatively do that, it makes your entire business so much more efficient. And that's why you always see in classic, like, really successful retailers and even Amazon always have those key moments to get you to add those things. Because the other crazy part is you can add one product to an order, and once you think about your product costs, once you think about your marketing costs, it could increase your profits for that order from 20 to 50%. And so as you think about your bottom line, making it doesn't even have to be expensive items. It could be a something that costs maybe 25 to 50% of the original item that you're going to sell to. But just because you've added in that incremental revenue, it didn't cost you any additional marketing dollars to do so. It can be extremely impactful for your bottom line. And then kind of the same things we were talking about before. The more money you make on that, the more you can cycle it into ads, the more you can sell through, the more you can invest in new products. And it's just it's a very nice virtuous cycle that keeps feeding itself as well.
Yeah, it's almost a data-driven flywheel that helps your business grow in a sustained way, right? Is taking that insight and applying that to where you spend the cash, right? In building that. So before we dig into a few other kind of key things, I just wanted to maybe stop and answer you can answer some questions in real time. So this is a question coming in from a viewer does Daasity ever run reports globally across your entire customer base or per vertical to provide benchmarking reports versus just using your own data?
Yeah, so this is a very actually hot internal discussion that we're having right now. We haven't done it internally, so without getting too deep into the weeds, because we store all of our brand's data, we have to be there's an extremely specific process we have to follow to make sure that like brand A's data doesn't show up in brand B's dashboards. It's on our roadmap to figure out how to do it in a safe, secure way, but it's something that we're very interested because we do work with some of the larger Shopify Plus brands, and while we service many different verticals, we think that there are some similarities across a lot of the different businesses that it would be helpful to start to share some standard insights across different brands. But at the same time, personally, my one feedback is I wouldn't rely too heavily on benchmarks. I find them to be extremely effective when you kind of are entering a space early on. But to be very honest, all the brands that we see really be successful, like I'm talking about like 200, 300% year-over-year growth rates and raising tons of money, or bootstrapping and just like really moving into that 8-9 figures. Honestly, their numbers look nothing like our other brands. And what I found to be really successful and the pattern that I keep recognizing is that they find the wins from within their business. So it might not be that like, okay, we have a 2.5 conversion rate. That's not what really matters. It's we figured out that right mix of this product is really profitable, and we can plow enough traffic at the site that at that 2.5 conversion rate, we can sell enough that we hit our numbers. And so I think while benchmarks are very helpful from a high level perspective, really digging into your own data and making that investment is what I've seen to be just a really big momentum shift for a lot of brands that have really been successful.
Yeah, it seems like the really successful brands know themselves really well, right? Mm-hmm. And know customers really well, and they're maximizing that interaction, right? One more question that's kind of related to this, just more of a general question. Do you guys ever run reports based on credit card bins? I found some amazing trends in this data at scale. Do you ever take third-party data and layer it in? I'm sure that's part of this internal discussion you're having right now.
Yeah, so for our larger merchants, we'll allow that. We basically have a service where we can ingest third-party customer data for them. We've never run a kind of grand scheme analysis across all of our customer base. And with just kind of how our TOS and our privacy policy works, we try to avoid any payment data or anything super personal to customers. Just any customer identifier like a credit card, just because we want to make sure that we're always taking care of our merchants' data first, and then also protecting them against any potential end customer issues that arise from that.
Right. This is a great question that actually goes back to the lifetime value conversation. This question is, I have a monthly subscription product. What will be the best way to calculate LTV based on a monthly subscription?
Oh, I mean, subscriptions are the best because they're super easy, because if everybody subscribed, you can just calculate out. And so if you're using Recharge, we actually have a dashboard completely dedicated to this. And one of my favorite dashboards, and this is just a super interesting insight for anybody who's interested in getting subscriptions, is we actually just break out what is the LTV of your subscribers versus the customers that don't. And I always do this graph because it's always this pattern. If someone subscribes to your brand, whether they churn in 30, 90 days, their LTV is way higher over time than the customers that don't. And so there's a lot of interesting patterns. Actually, this reminds me of Kopari. So if anybody isn't familiar, they're a coconut-based skincare brand. We've been working with them for a while. They were one of the earlier customers. Now they're huge. I mean, I don't even know how big they are anymore, but they seem to be everywhere. And they actually found, and this is one of our cooler case studies, was the customers who subscribed on their first order versus the customers who subscribed after they bought something else had way lower LTVs. And so what they found was when they dig into their data, and this is kind of what I mean by like dig into the data, figure out what's going on with you, is people were basically just signing up for the subscription program to get the discount and then immediately unsubscribing after their first order because they were just deal hunters and they were just looking for something, versus the customers that bought one or two things, loved it, said, I'm going to incorporate this into my routine, and then subscribed, and their churn rates went way down, their subscription length went way up, their LTV also went way up, and they completely restructured, or like they were like so excited, they launched a subscription program, they started like all their marketing. They pivoted to really focusing on acquiring customers to buy one time, and then from a retention perspective, moving them into the subscription program. And at the time, this was huge for their brand. It was really impactful, not only in the day-to-day, but they literally took the data and raised a huge Series A at about $20 million, which I think it was about 4 years ago, was really what they used to scale the brand, invest in. They extended from just skincare to deodorants and sunscreen, and there's probably a very long product catalog now that I can't remember all of it. But it's one of those things of subscription programs are great. And we also find other customers are tracking that difference so that they can see, okay, what's the LTV of my subscribers, and then what are the LTV of my non-subscribers, and how can I build retention programs for both? Who Gives a Crap is another great example of that, where they have a completely different email flow and they have a completely different follow-up cadence of if you're a subscriber or if you're just a repeat purchaser. And it's really cool to see them really restructure their strategy of how do we get our transactional and our non-subscription customers to purchase like they are a subscriber, to have that habitual repeat purchase rate. And it's just really cool to see them have those really strong retention numbers that are driving their business in addition to that core subscription program.
Yeah, this is so good. And you're talking about kind of the strategic application of data and metrics that we've been talking about. I just want to get a bit granular for anybody that's trying to dip their toe into understand how to measure this in their own business. Could you maybe walk through the calculation of CPA and CPO again, just if somebody's trying to figure out this number for themselves, like what is that calculation? And lifetime value, maybe if you just high level how you would calculate that.
Yeah, really wish I had a whiteboard behind me. I could like draw it all out. So at a really high level, the simplest one's cost per order, right? So you just take out of basically whatever you're using to budget every month, what's your entire marketing spend, and then divide that by the number of orders. And you can pull that out of Shopify or whatever you're using to track orders. And it's basically just a simple one over the other division. Cost per acquisition is going to be very similar. So your total marketing spend divided by how many new customers you acquire. And so that's probably, you can pull that out of Shopify. Is probably going to be your best source to figure out your new versus returning customers. And then also from that, you can essentially just balance out to be your cost for your retention, right? Like you can just take your total number of customers, subtract out your new customers, and then that's how many orders came from repeat customers. Lifetime value is going to be your gross margin divided by your customer base. So you can, at a really, really high level, if you want to do this, my CEO is going to kill me for this, but the easiest way to do it is just take your total gross margin that you made for the previous month and divide it by the total number of customers that made a purchase. It's very far from perfect, but it's a really just simple way to get started. And then the last one is units per order. So this one's a little bit tougher to calculate if you don't use some sort of analytics tool, just because you have to go back and essentially sell, or if you're whatever you're doing in inventory management, actually would be easiest is pull the total number of units sold and then divide that by the total number of orders. And so it's a lot of data dumping if you aren't going to use an analytics platform or a data warehouse to consolidate all of that for you. But it's something that you can probably have whoever on your team is running the numbers every month, just add that in. And then it's really, really helpful to pass back to the marketing team, to the ops team. Those are the numbers that they should be thinking about in their head of how can we make this more efficient? How can we really start to drive these numbers? Because when they're really focused on that, that's when you can really start to see those, not only just the incremental gains, but those kind of big jumps up in your business.
Yeah, no, that's really great. And once a founder or a brand or the marketing team has those kind of KPIs defined and their calculations are accurate, how do they make those actionable? You talked through a few use cases of the frequency that a brand looks at that data. Can you walk us through maybe how a brand actually makes that number actionable, just as a refresher? I think you covered it a bit in the beginning, but I think it's an important point.
Yeah. So the kind of cool thing is that every team should have their own metrics, and every team should use those metrics to kind of use it as a guidepost, right? Like, I don't believe that data is going to rule your job. Like, data is there to help inform you to do a better job. So, right. So for CPAs, it's really, I think that's probably one of the simplest ones, right? Of your paid media team and your marketing team should be focusing on that, because it's going to get more expensive. So how do they optimize ad copy, targeting, landing pages, all those different things to push a number like that down? Customer lifetime value is a little bit more complicated. There's a lot of moving pieces. You can, a lot of different teams address that metric between your acquisition team, your retention team. But it's definitely something that, like, if you've ever raised money, if you have a board, if you have any investors, it's what they're going to want to know. And so that's more of a holistic view of the business. And then units per order can be your marketing team, or it can be whoever manages your site merchandising, right? Bundles automatically increase that. If you can have an on-site pop-up, if you can have an email flow that cross-sells a lot of emails effectively. And so what's really cool is, and we have like 14 or 15 different dashboards out of the box that relate to each team, because you can do this on the inventory side, you can do this on the customer support side, is there should be some sort of benchmark or flag post that the team knows whether they're successful or not. And so I don't want to get too caught up in, like, you have to set very specific goals, you have to measure everybody by those goals. I would recommend doing something around that, so that a year later, when you're doing performance reviews, everyone on the team knows if they were successful or not. But just having that to understand, is this trending up or trending down over time, is usually where most people start. And then it's, why is this trending up? What can we do better? Why is this trending down? What do we need to kind of correct and bring back to that level that we expect?
That's really good. I think that's a great way to kind of summarize this talk. And I know we're going a couple minutes over, but I think it's an important point. And one more thing, because I know you guys are offering a 15-day free trial. If a early stage brand came to you, a lot of early stage founders think they have to get to a certain size before they maybe think about analytics or think about data. Is there a certain size that is kind of the sweet spot, or should you be looking at that data from day one? Maybe just comment on that piece.
Yeah, so we definitely work with brands that install us day one, and they just, once they have data in, they want to make sure that it's all tracked, they have everything really well defined. And some other things, like you can schedule reports out to send to teammates so that it's really easy to manage. I would say that, I mean, you need to have data to analyze data to make it valuable. So I would say that there's definitely a place where probably around $500,000, $1 million in orders is where you're going to have enough data where those, especially those high level metrics, are going to be really important to track. And it's one of those things of, we're working on this every day of, like, how do we make this more accessible? How do we make this? Because the younger you are, actually, the more important this is, because every decision has such a huge impact on your business, versus when you're really large and you can maybe take a couple of big blows from a revenue or a profit perspective, versus, like, every product has to hit, every ad needs to perform in some respect. And so I encourage everybody to at least look at their data as early as possible. And then usually, and this kind of happened to me in my previous career where I was the econ manager, and I ended up being the data guy on my team, is it usually falls to someone on the team as their part-time job before you can really have a full-time analyst or have a team really dedicated to it. And it's one of those things that you don't need to be in there every day, even if you can only check it once a week, once a month. It's so helpful because it really helps answer a lot of the why questions of your business, right? Like, it's fairly easy to see, is revenue going up? Is revenue going down? Are costs going up? Are costs going down? Or you can really see all the metrics together, and you can see how things are pacing. You can see, okay, AOV changed a lot. This changed a lot also. And then we saw a big shift in this metric as well. And it helps you triangulate to solve those problems faster. Because at the end of the day, especially if you're a startup, that's the name of the game. How quickly can you solve customers' problems, deploy those customers' problems, and monetize it? And so I know that's probably not the answer that everybody wants to hear, but really, you should be looking at your numbers as early as possible. And we find that the brands that really build that into their org early, it pays really compounding dividends over time, because it really helps establish the culture to more of that, we're going to shoot from the hip and trust our gut, to how can we empower our team and make our team feel more confident in their decisions and have a common language that we can all kind of speak to.
That was a great way to wrap, and we could probably talk about this for another couple of hours. So
I definitely could.
Please do come back, because I think we have some more to unpack there. And For anyone that's joined us today, you can get a 15-day free trial. Just go to daasity.com. And you can also sign up for Clearco, get free benchmarking insights and valuation of your business at clear.co. So Jeremy, thank you so much. We'll definitely have you back for another session because I think there's a lot more to learn here, but thanks for your insight today.
Yeah, definitely appreciate it. Really appreciate everyone's time. Thank you.